Regulatory changes in fintech. What investors need to know. In recent years, fintech has transformed the way we interact with financial services, seamlessly blending technology and finance to create innovative solutions. However, as the industry evolves at a breakneck pace, regulatory frameworks are struggling to keep up. For investors, understanding these regulatory changes is key to making informed decisions. In this video, we'll explore how regulations are reshaping the fintech landscape, the impact on businesses and consumers, and what it all means for your investment strategy. Let's dive into how staying informed about regulatory trends can help you navigate this dynamic industry and uncover potential opportunities. Regulation plays a crucial role in the financial technology space. It ensures that innovation benefits consumers without exposing them to undue risks like fraud, data misuse, or financial instability. Fintech companies manage sensitive financial data and handle large volumes of transactions, so maintaining trust and security is paramount. The rapid growth of fintech, coupled with high-profile incidents such as market manipulations or data breaches, has propelled regulators into action. As a result, many countries are introducing new policies to ensure companies operate fairly, protect consumers, and maintain market stability. But regulations aren't just about adding constraints, they're also creating opportunities. Companies that adapt quickly to new rules and embrace compliance often gain a competitive edge. For investors, understanding these regulatory shifts is vital to assessing both risks and growth potential in this fast-moving industry. Recent developments in fintech regulation are setting the tone for the future. Let's look at 3 key areas where regulators have made significant changes. Cryptocurrency regulation. The cryptocurrency market has long operated in a gray zone, but this is starting to change. Countries worldwide are introducing stricter Know Your Customer (KYC) and anti-money laundering (AML) requirements, aiming to regulate crypto exchanges better and reduce fraud. This wave of regulation has been critical in increasing transparency and combating illicit market activities. At the same time, clarity around taxation frameworks for crypto investments is evolving, making compliance easier but also nudging out unregulated players. Open banking and data sharing. Open banking initiatives have reshaped how financial data flows between institutions. By mandating that banks share customer data with authorized third parties, regulators aim to empower consumers and foster competition in the financial ecosystem. In regions such as Europe, with its revised Payment Services Directive, PSD2, this drive for transparency has given rise to new business models, enabling fintech companies to offer personalized services. Lending platform compliance. Online lending platforms have come under scrutiny, particularly regarding their lax credit risk assessments. New regulations now require stricter underwriting processes, ensuring borrowers are treated fairly and given loans they can manage responsibly. This impacts how fintech lending platforms operate, with a shift toward greater accountability and fairness. Beyond existing reforms, several upcoming regulatory developments are poised to significantly impact the fintech industry. Anticipating these changes is critical for investors. Central bank digital currencies, CBDCs. Governments worldwide are exploring the launch of CBDCs as a means to modernize controlled currency systems. These could revolutionize how transactions are conducted, but may also pose challenges for private cryptocurrencies and payment platforms. AI in financial services. As fintech companies increasingly deploy AI to make lending decisions or detect fraud, regulators will likely introduce frameworks to ensure transparency in AI-driven decision-making. The ethical use of AI will remain under heightened scrutiny. Stronger consumer privacy laws. Enhanced data privacy regulations, building on frameworks like GDPR, are set to influence how fintech providers manage and secure consumer data. This will likely push companies to upgrade their data compliance measures. For fintech companies, regulatory changes can be both a challenge and an opportunity. Compliance costs are rising as businesses spend more on technologies, processes, and legal expertise to meet new regulations. Startups, in particular, may find it difficult to allocate resources toward compliance while maintaining their growth trajectory. However, for established players and well-funded startups, embracing these regulations early can be a major advantage. Demonstrating compliance reassures customers and investors that the company operates responsibly. Moreover, some businesses are positioning themselves as leaders in regulatory innovation, which helps them build trust and differentiate themselves in a crowded market. Adapting to these shifts, however, requires careful planning, collaboration with regulatory organizations, and a willingness to innovate under new guidelines. While these regulatory changes may seem like a burden on businesses, the effects on consumers are largely positive. Tighter rules around transparency and security protect users from fraud and data misuse. Open banking initiatives empower customers, giving them better control over their financial data and enabling access to a broader range of services. However, increased compliance requirements might indirectly impact how fintech products are priced. Consumers could face reduced accessibility to high-risk services, such as certain types of quickly approved loans, as companies tighten eligibility criteria to meet regulatory standards. For investors, fintech regulation brings both risks and opportunities. Companies that struggle to adapt may see declining valuations, while those that thrive in a more controlled environment could emerge as industry leaders. Understanding a company's ability to navigate regulatory hurdles is crucial during the due diligence process. Key questions to ask include: does the company have a strong compliance strategy? Is it investing in automation tools to manage regulatory reporting efficiently? Is it proactively engaging with regulators? Moreover, regulatory changes often create new market opportunities. For example, the growth of compliance technology, RegTech, or cybersecurity solutions to meet regulatory demands presents promising investment avenues. It's important to note that fintech regulations vary widely by geography. While the European Union leads with comprehensive frameworks like GDPR and PSD2, the United States follows a fragmented approach with different rules across state and federal levels. Similarly, in Asia, Singapore's Monetary Authority of Singapore, MAS, has emerged as a proactive regulator offering funding and sandbox initiatives to foster innovation, whereas other regions impose stricter capital controls. Investors need to consider how these differences shape global fintech operations and assess the regulatory risks of companies operating across multiple jurisdictions. While stricter regulations may seem like a potential obstacle, they can unlock opportunities for companies and investors alike. These include RegTech solutions. The rising demand for technologies that streamline compliance processes has led to a fast-growing RegTech industry. These solutions can improve efficiency in areas like fraud detection, reporting mechanisms, and AML compliance. Cybersecurity services. Regulations demanding stronger security measures are creating opportunities for cybersecurity providers to thrive. Early movers. Companies that quickly comply with regulations can benefit from increased trust among consumers and regulators. Investors who carefully monitor these trends can identify sectors and companies positioned for long-term success. History has shown that innovation often thrives in times of regulatory change. For example, in the wake of the 2008 financial crisis, regulations brought new safeguards to financial systems while also creating opportunities for fintech companies to develop innovative solutions that filled gaps left by traditional players. Looking back at how these shifts have impacted markets provides valuable lessons for investors today. Those who identify resilience and regulatory alignment in companies early tend to reap significant rewards. As we wrap up, here are a few actionable steps investors can take to navigate the dynamic fintech space. Stay informed about regulatory changes in key markets where your investments operate. Evaluate a company's readiness and resources for handling compliance costs and meeting new regulations. Keep an eye on sectors like RegTech, cybersecurity, and compliance tools as areas of growth. Watch for companies actively engaging in regulatory sandboxes, as these are often indicators of forward-thinking, compliant innovation. Diversify your investments to mitigate exposure to companies struggling with regulatory burdens. Regulatory changes in fintech are driving transformation. These shifts bring challenges, but for businesses and investors that adapt, they also present significant opportunities. Whether you're investing in a fintech startup or monitoring an established player, understanding regulatory trends will help you assess risks, spot growth potential, and stay ahead of the curve. Thank you for watching. Don't forget to stay informed as the regulatory environment evolves, and subscribe to our channel for more insights into the fintech world.